What's up, homies? Welcome to another episode of the Homies Real Estate Podcast. This is your host, Anthony.
I'm Angel.
I'm a realtor.
I'm a lender.
And together we're going to break down this crazy real estate market. We got another great podcast for you. We're going to go with very important real estate information. Data that you should know if you're looking to purchase or sell real estate, or if you just want to keep your posts on the market. So we're going to talk about inflation. We're going to talk about mortgage demand. We're going to talk about mortgage rates. We're going to talk about home prices, and then expert forecast for the remainder of 2022. So with that said, Angel, let's go ahead and get started. Let's talk about inflation. So I'm going to talk about this topic myself. I can tell you that inflation rose to 9.1% in June, even more than expected as consumer pressures intensify. Now, when we look at core CPI, which excludes food and energy prices, it increased to 5.9% compared to the 5.7% estimate. So core inflation had peaked back in March. So it's good news that core inflation is decreasing. And much of the inflation did come from gasoline prices, which increased 11.2% on the month and 60% over the 12-month period. So that's why inflation is at 9.1%. One of the biggest factors is gasoline prices, which I'm sure you all feel at the pump right now.
Good news is they did announce, or I believe they came out with data, if I'm not mistaken, that the cost for, is it a gasoline barrel, I believe? Pretty much the cost of gas has recently gone down. So you guys, I don't even if you've even seen it at the gas stations, gone down just a little bit. So hopefully gas prices will start coming down. That will help calm down inflation. And the reason why this is important for interest rates, right, is remember Federal Chair Jerome Powell, the feds, they control interest rates, right? They said that interest rates will continue to rise as long as inflation is rising, or until inflation gets under control, or where they feel inflation is under control, right? So of course that's going to play effect on where the Fed rate is going to have an effect on mortgage rates, right? So super important to see where inflation stands through the rest of the year. But remember, just because the Fed rate goes up doesn't necessarily mean interest rates are also going to rise. Last time that the Feds increased the rate, we actually saw mortgage rates tick down just a little bit, and they've been down a little bit since then. Not too much, but we were like a little over 6%. Now we're at an average 30-year fixed interest rate of 5.7%.
Yes, absolutely. So inflation is going to play a big part in mortgage rates, which in turn does impact borrowers' purchasing power, and in turn how much they can make a bid on a home, and then in return how much prices homes are selling
Butterfly
for.
effect.
Yes, exactly. So Angel, let's talk about mortgage demand. I know you're a lender. You know this. Let's talk about what it's looking like right now.
So today they came out with the news of mortgage applications over the last week, and mortgage demand has dropped to its lowest level in 22 years. That is the lowest point since 2000. Since the year 2000. And then the reason for this is, again, with the increase in the home prices have continued to increase this year, as well as mortgage rates nearly doubling where they were at the beginning of the year, right? So that's all going to play an effect into how much somebody qualifies for, or somebody's want for a mortgage right now, right? And then the average interest rate for a 30-year fixed rate for conforming loan balances increased to 5.82%. And then this is for loans with 20% down, right? That rate was 3.11%. That rate was 3.11% compared the same week 1 year ago. So drastic changes to interest rates, which of course is going to cause people to stay away from mortgages and purchasing a house.
Yes, absolutely. And the Federal Reserve is expected to hike interest rates even more. Again, we're battling inflation, and the projection that's supposed to come next week is a 75 basis point hike, which equates to 0.75%, which should impact mortgage rates moving forward and maybe drive those mortgage rates back into the sixes or low sixes.
Potentially, though, remember,
Potentially.
last time the Feds increased the Fed rate, interest rates went down slightly. So it's not the Fed increasing the rate is an indirect effect on mortgage rates, not a direct effect, right? So it all goes back to inflation, to see where the economy's at. To stimulate the economy, there's a chance that they might bring down mortgage rates, right? That could happen as well. I don't think that'll happen over the next month or two, but I think towards the end of the year, that's what we're going to be seeing.
Yeah. So let's talk about home prices. So we're looking at Los Angeles, not Los Angeles County. So let's talk about home prices, and let's talk about Southern California home prices. So the region's 6-county median sales price was $750,000. Now that dropped to, okay, so let's touch on this one more time. So Southern California home prices, which encompasses 6 counties, has dropped from $760,000 in May to now $750,000 in June. Now this is very unexpected because we typically see home prices increase from May to June, especially going into the summer. This is the first time prices have dropped from May to June since 2010, and that's when we were just getting out, or I guess starting to pivot into an appreciating market like we are now. So this is very, very uncommon. But nonetheless, home prices have still increased from $679,000 last June to now $750,000. So that's still strong appreciation. And real estate agents are now saying that, there's less people that are looking for homes. So there's less of those bidding wars as opposed to competing with 10 plus offers like there was once when there was that buyer frenzy. You're now competing with a couple offers, which makes the experience so much better if you're looking to purchase a home now. And now the standard that buyers have in homes is much higher. Now they can expect to ask for some closing costs or ask for some credit or ask for repairs, whereas
just have a contingency, right?
Yes, exactly. Whereas a month ago, or a couple months ago, you wouldn't even be able to ask for anything. You're taking the property sold as is.
Yeah, and I can speak on that a little bit on some of my buyers that are out there right now. I mean, they're usually competing like almost on all offers they're putting out. My realtors like, yeah, we're one of the top 2-3 offers, right? It's not that they're one of the top 2. It's just that they're only 2 or 3 offers most likely right now. It's a changing market. It's funny. Some listing agents still think it is a month or 2 ago, and they're coming to the realization that, hey, if I don't sell this house soon, then I might even get less for the house if rates go up, right? Or if there's less people wanting a mortgage. So just to tell you a little story real quick, story time. I had a client, one of my realtors did an open house. He got the buyer. The buyer wanted to make an offer on this house. This house was listed at $900,000. My client didn't. We pre-qualified them, so forth. My client put an offer at $905. Did ask for help with closing costs, right? Just because the house has been sitting a little bit of time. We submit the offer, and the listing agent's like, "Oh no, like we want $950," and we're like, "Well, what's your other offers?" They don't have any other offers, And then he's like, all right, let me do one more week of open houses and see if you can get your client to go up a little bit. So our client went up to 910, right? And then they do another week of open houses, nothing. They didn't get no offers. So then then we go back and like, hey, like, do you want to take the offer? What's going on? Like our client is ready to move on this house. And and my realtor explained to him, look, if you can wait and try to expect that offer, but if you wait 2-3 months, there's a chance my client or other clients are not even going to offer close to this anymore. They might be offering $850, $860, less than what we're offering. So I suggest that you take the offer right now while my client still wants to do it. So they're going to wait one more week to see this open house. And they said if they don't get anything better than ours, then they're going to take our offer. But it's just a realization that listing agents, especially that specific agent and their team, they do a lot of deals. They're investors. So they're coming to that realization that the market's not what it used to be. And unfortunately, for some of those flips that these investors are doing, they may be taking a little bit of a loss or not reaching the profits that they thought they were going to be hitting.
Yes, absolutely. So
Yeah.
wake up call, listing agents.
Yeah.
The market is shifting.
Yeah.
And if you got a good offer in hand right now, might make sense to move forward with it, especially if interest rates are continuing to increase, because
Yeah.
that buyer is not going to qualify for that same amount if there is an interest rate hike that comes.
Exactly.
So, Angel, let's talk about the forecast, right?
Yeah.
So we have some data here from Keeping Current Matters, and it's expert housing market forecast for the second half of the year.
Mm-hmm.
And it asks, where are mortgage rates heading? Will they continue to go up? Will they decrease? What's going to be the deciding factor in this? And there's a quote here that I think captures this perfectly. Until inflation peaks, mortgage rates won't either. Without improvement on the inflation front, we don't know where interest rate ceiling will be. So basically what they're saying is until inflation peaks and until we see prices start to go down, when we talk about inflation, core inflation especially, then that's when we can start to see the Fed funds rate drop down and in turn likely see mortgage rates follow.
Mm-hmm. Exactly. I mean, I kind of spoke to that earlier, right? So the Feds are super big on that right now. They're not going to lower it. They're going to continue. Not only are they going to continue to increase the Fed rate, but they're going to do it significantly. 75 basis points is no joke. That's a big increase, right? So expect a few more of those if inflation doesn't calm down. And that's kind of, again, what that quote is referring to is if inflation doesn't stop, Fed rate's going to go up, which there's a chance that interest rates follow. Mortgage interest rates, I should say.
Absolutely. Angel, why don't you go ahead and touch on the supply of homes?
Yeah, so experts, so I'm just going to read this real quick. Experts say that growth will continue. Recently, realtor.com updated their 2022 inventory forecast, and the latest release, they increased their projections for inventory gains dramatically, going from 0.3% increase at the beginning of the year to a 15% jump by the end of 2022. So put all that mumbo jumbo together, it's just saying that the amount of inventory available for you buyers is going to increase dramatically, right? There's going to be more home options. Anthony said more negotiation tactics that are going to be able to be used. It's not going to be like it was 2-3 months ago. Maybe you can get a house below asking price. Maybe you can get closing cost credit. Maybe you can get some closing costs to buy down your rate. There's going to be options for you buyers out there to in order to get you the best deal, really, right? Yep. So, and we're already kind of seeing it happen, and I think over the next couple months we're going to see it more and more happen.
Absolutely. I mean, real estate, it always just boils down to supply and demand, right? And if there's a greater supply of homes, and as we've talked about before, buyer demand is starting to dwindle, then there's less competition for the same exact home. So then now sellers are willing to come to the table to negotiate where they weren't all of 2021 and most of 2020.
And remember, mortgage apps are decreasing while inventory is increasing, right? So it's balancing the market out. So that's something, just wanted to throw that in there.
Yes, absolutely. So let's talk about the home price forecast for 2022. So we have data here from about 7 different organizations, right? Fannie Mae, Freddie Mac, CoreLogic, HPES, National Associations of Realtors, Zelman, MBA, or the Mortgage Bankers Association. And they forecast, all encompassed together, an 8.5% appreciation for 2022. Now, most of this appreciation did happen in the first half of the year. So as I mentioned earlier in the podcast, when we looked at Southern California home prices, from last June to this June did increase about $80,000. So you can see that, yes, we're still in an appreciating market, although prices are starting to decrease slightly month over month. In a yearly basis, which is how we really calculate appreciation, prices are continuing to increase, right?
Yeah, and I just want to add on to that. I think that's one big thing Anthony just hit on. It's year over year that's really important, right? 1 month to another month doesn't mean that the sky is falling, right? It's after we get consistent. It's called confirmation bias, if I'm not mistaken, right? You get I don't know, I learned that in business. After it happens multiple times, it's confirming what what you're saying, right? So it can't just happen one time. It has to happen multiple times in order for that to be correct.
Yes.
Is what I'm saying.
Yes, I get what you're saying. I don't know if that's considered confirmation bias.
No, I might be off. I'm sorry.
Confirmation bias, I think, entails if you believe something, you always look back and point out reasons why to believe it. As opposed to looking at everything objectively.
Probably thinking something else.
Yeah.
Sorry,
I get what you're saying. But it definitely is. The prices are being confirmed.
I swear I got a degree. I swear.
Should have went to UCSB.
Oh, goodness.
Oh, my goodness. Okay, so there's an important quote here that encompasses this right here that is really, really important and that I really want to drive down. And this is probably the most important quote that you're going to hear in this podcast. So if there's anything you take away, take this away. The current home price growth is unsustainable, as we saw, where it was 20% year over year from, ridiculous. 2020 to 2021. It was crazy, right? And mortgage rates coupled with more inventory will lead to slower home price growth, but unlikely a decline in home prices. So what this means is we're going to see a deceleration in home prices, not necessarily a depreciation in home prices. Home price growth is not going to stay at the crazy rate that we saw the last 2 years, where it was 10, 20% year over year. Nope, it's probably going to revert back to what we saw from 2012 to 2019, a healthy 6-7% appreciation in Southern California, and probably slightly lower in other markets nationally, just because Southern California tends to be a really hot market. Yeah. So yes, we're likely going to still see home price growth. And then the reason being is because, yes, buyer demand is wavering. Yes, interest rates are increasing slightly right now, but we just still have so much more buyer demand than we have a current supply of homes. And there's something that's really important. It's called inventory month supply. Inventory month supply is the leading indicator whether we're in a buyer's market, balanced market, seller's market. In a seller's market, anything less than 5 months of inventory month supply, meaning if there was less than 5 months for all the homes on the market to be sold, if no more homes were listed, we would be considered a seller's market, because homes are just selling really quickly. There's just so much demand for homes. Anything between 5 to 6 months is a balanced market, which means there's an even amount of homes compared to buyers on the market, right? And then 6+ months, which we haven't seen since around 2011, 2010, 6+ months is considered a buyer's market, right? So if it took 7 months for all the homes on the market to be sold, if no more homes were listed, that'd be considered a buyer's market. We had dug ourselves in such a hole that even over the last couple months, where we're starting to see more demand and you're hearing all these highlights and stories about, oh, there's so much more homes for sale. There's twice as many homes for sale as there was last year. Wow. The city with the highest inventory month supply is Dayton, Ohio, with 3.6. That's the city in the United States with the highest, 3.6. They're still a ways away from reaching a balanced market, 5 to 6 months. In Southern California, we're at about 2 months, even less. So think about that. It's going to take us a very long time to hit a balanced market, or even think about sniffing a buyer's market. So yes, we still expect prices to continue to increase just because the supply versus demand.
Yeah, and I think that was the goal of today's podcast is, highlight the facts and what the news is putting out there, but also sticking to what we believe, which is that their prices are gonna continue to increase, right? Yes, inflation has risen. Yes, there's a chance interest rates may continue to rise. Yes, we're at the lowest demand for mortgages in 22 years. Yes, there's less competition out there, but again, it's still based on what the experts are saying and based on what me and Anthony believe, we still really think that home prices are going to continue to rise despite these other factors. Of course, they do have an effect on it, on home prices and on appreciation, but nevertheless, an appreciating home is rather it's 1% a year or 20% appreciating. You're still making money on your property, right?
Absolutely. Homies, say this with me. The housing market is decelerating, not depreciating. That's the key takeaway of this podcast.
Yep.
So I hope this really helps you get a better understanding of inflation, its impact on mortgage rates, the housing market, home prices, and then where we predict home prices going in the future. Hopefully we start to get some good news. Hopefully inflation starts to cool off, because no one likes paying more at the pump. No one likes paying more for their groceries and stuff. And no one likes paying more rent and everything. But hopefully we start to get some good news, so interest rates can start to drop back down. And, hopefully your monthly payment doesn't turn. With that said, homies, I do want to wish you all the best. Take care and stay safe.
Thank you, guys. Hey, homies, it's Angel from the Homies Real Estate Podcast. This podcast contains our opinions and is for educational purposes only. It does not guarantee any projections and should not serve as the basis for any purchase or sale in real estate.